Hey, welcome. This is James Bullock, your real lender. I'm with Waterstone Mortgage, and today we're going to go over the win of the month for the month of August 2022. We actually have 2 wins for this month. But I wanted to precursor that with why you would want to work with Waterstone. If you're a real estate agent or you're looking to buy a house just by yourself and you came across me, or you're looking at potentially refinancing your property, meaning you want to take some money out, you want to buy other properties, whatever that may be, there's a lot of reasons why you would need a loan. If you're looking for a long-term loan, anything over 10 years or longer, right, that's where I come and play. We lend in 48 states. So wherever you are, wherever you move to, I can help you out. We have over 150 programs available. So whatever the option may be or the need that you specifically have, it's likely that we have an option for you. What separates me apart from everybody else is I'll take the time. If I can't do the loan myself, I'll find someone that can. That's where I put my foot on the ground and I help you guys get that extra value. You're a first-time buyer, we have down payment assistance programs. You're looking to buy a mobile home, we have single, double wide mobile homes available. You're looking to buy land, we have lot loans. You're looking to build on a lot you already have. We have construction loans. You're looking to do zero down. We have down payment assistance programs. You're looking to buy a house and fix it up as you go. We have rehab loans as well. If you're looking to, as an investor, buy a house and rent it out long term, we have investor loans too. So many options. All you got to do is give us a call. This is my direct number here on the screen, 480-798-2756. So let's get to our win of the month. So the win, it's actually 2 wins of the month for August, is 2 buyers that closed on their house in the month of August that had some issues as far as them actually being able to close and make it work. All right, the first one is a family that they're moving from another state in Missouri. They got under contract for a manufactured house out in southern Arizona. And we spent time on what are the do's and don'ts of buying a house, right? Like some of we call them the 10 commandments, where you're not supposed to change bank accounts. It's not good if you change jobs while in the escrow process. It's not good to quit your job. It's not good to finance a car or make other big financial purchases during that time. You want to kind of keep everything that you've been doing similar to what you're doing. You don't want large deposits because we have to source them. So after talking with these buyers in depth as far as what not to do, they let me know about a week later. So they said, hey, James, we got something to tell you. We got a car, we financed it. And I told them immediately, hey, we need to return that bad boy because that could potentially kill the deal. Killing the deal means we're not able to perform on the loan. It's now they're not able to buy the house. And they told me a week after they bought the car. So unfortunately, they weren't able to return the car. It was kind of crazy. They bought a car that's almost the same value of the house. Because in southern Arizona, you can get a house for $225,000. Well, this car was about $75,000, a $850 a month payment. They wanted the house. They didn't want to sleep in their car and live in their car because they already moved. They already sold their house in Missouri and they're coming. So the win of the month for this and why this matters is that a normal lender would say, you know what, guys, I'm sorry, this is at my end point. Good luck. I can't really help you. You're done. Like we're out. The ratios, we're now in a debt to income ratio. We have to typically be under 45 to 50%. This put them to like 75%, meaning we can't do it. So what I did is I looked around for other solutions, other loan options that we have, and there wasn't any that would, push it higher. So I told them, I said, look, if you guys really want to buy this house, we need to scramble. We need to find a co-signer, someone that's willing to help get on this loan and help purchase this house to make it work. They said, I don't know how to do that. I don't know who would do it. I don't know how to mention that. So I told them, look, give me the names you got, the names and numbers. Let's do a conference call with everybody so they understand what's going on, the importance of this decision, and then if they wanted to co-sign at that point. Because a lot of buyers that are going to co-sign, they don't truly understand what goes in place. Because if you get on the loan, you co-sign for a loan, you're financially obligated and responsible for that loan as well. So we did a conference call. The husband found a friend, and the friend's like, yeah, I'll help. I make good money. My credit's good. I don't own a house right now. I'm totally fine co-signing. And the husband said, great, I'm cool if he co-signs, I just don't want him on title. And the guy's like, what does that mean? And so I was to explain in the conference call, right, what the title or deed means, that if you're on the loan, you're financially obligated to perform on that loan. Like if those other guys don't make the payment, that guy's gonna get his credit dinged as well, or he's gotta make the payment. And then the deed or the title is who has ownership rights of the house. That's who gets to stake a claim in the actual ownership. So you can co-sign and not be on the title. And he didn't want the friend to be on the title because he didn't want the friend to have part ownership. He didn't understand, the friend didn't understand what this was in that equation. So I explained. And I said, look, if I was gonna buy a house and I was gonna co-sign for a friend to help them buy a house, I wouldn't co-sign unless I was on the deed, because if you're gonna put your finances on the line, it's important to also have something in return, which would be part ownership. So after explaining that, the husband was on board. So, okay, let's do it. And the friend saved the day. So why that matters to you is there's a lot of things that happen from start to finish when you're buying a house. There's a lot of things that could hurt the deal, and there's a lot of things we can do to navigate through. So until it's completely no other option, I will dive through everything to make it work, and I'll include you in it, and I'll go all out. And so on that note, the next one is kind of similar in that sense as far as the ratios, but different in the outcome and the actual process. It's someone that was trying to buy a new build last year, and they got, for whatever reason, it didn't work out. They kept getting that date pushed back, and then they gave up on the builder. That they weren't going to actually perform on the house, so they backed out. They were moved back to California to move in with the mom, and they wanted to basically build a house on the mom's lot and live there to help her out because she needs some care. So when they did that, in order to build on that and have them qualify on the loan, we need to have them on the deed of that property. So then we could do what's called a cash out refinance, and you have to wait 6 months. It's called seasoning, where they're on the deed for 6 months, and then we can do the refinance. Well, construction of a house typically takes 8 to 12 months anyway. So we thought that was gonna be a good idea. And as they're doing their build process, the builder, the contractor, everything, they were starting to be a little dishonest. They didn't have integrity. The actual results of what they thought it was gonna be was nothing near it, and they lost a lot of money. So they gave up on that and decided to move back to Arizona to purchase a normal retail house where it's on the market and close. So we got them under contract, and while we're doing everything, remember that story, they're back on the deed. And so if you're on the deed of another property, you have to get hit with the taxes and insurance and mortgage payment if there is a mortgage. Well, it was free and clear, but what the title of the California house, the taxes are high in California compared to Arizona. So their ratios also were a little skewed on that regard. But what was interesting is the title had misplaced the information about a solar that they had and made everybody think that they had to pay a private solar loan when it was actually in their property taxes. So I took time to find out 5 different solutions to make it work for them. And long story short, we just basically went down the list on what we could do, right? Remove them from the deed of the house, that we don't have to include that in their debts. They didn't want to do that. We can pay off some debts to clear up the ratios. That's what we ended up doing. Because they had sold their house last year, they had some funds available. That was the easiest way to make it work, is they actually didn't even have to purchase anything or buy anything outright. They sold their lease back to the owner, and from there that freed up their debts. And so those 2 wins of the month are, if you're working with me and my team, whether it's early on or during the process, we're gonna find a way to make it work, and we're gonna exhaust all options until we find something that will work. And then at that point, it's up to you guys to choose which route to go and then actually do it. The saying, you can lead a horse to water, but you can't make him drink. So I come up with the solutions, I'll figure everything out, I'll navigate in whatever scenario we're faced with. And then from there, you guys need to pick which route to go, and then let's do it. So give us a call, and we'll help you out anytime you guys need. Have a great one.